Inflation is a natural and ongoing phenomenon in any economy. It is the rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. Inflation has a significant impact on our savings, and it is essential to understand how it affects our financial well-being. When inflation is high, the purchasing power of our money decreases. This means that the same amount of money can buy fewer goods and services than before. For example, if the inflation rate is 10%, a product that cost $100 last year will now cost $110. This means that our savings will not be able to buy as much as they could have before. In other words, high inflation erodes the value of our savings. Another way in which inflation affects our savings is through interest rates. Central banks usually increase interest rates to curb inflation. When interest rates are high, savings accounts and fixed deposits offer higher returns, which can offset the effects of inflation to some extent. However, when inflation is very high, interest rates may not be able to keep up, resulting in a real loss of purchasing power. Inflation also affects our savings through our investments. When inflation is high, stock prices tend to rise as companies can charge higher prices for their goods and services. However, this is not always the case, and stock prices can also decline due to other factors such as a recession or a decrease in consumer spending. Bonds, on the other hand, tend to perform poorly during periods of high inflation as the fixed interest rate on bonds becomes less attractive compared to the rising inflation rate. To protect our savings from inflation, it is essential to invest in assets that have the potential to appreciate in value faster than inflation. For example, investing in real estate or equities can provide returns that are higher than inflation. Additionally, investing in inflation-protected securities, such as Treasury inflation-protected securities, TIPS, can also be a good way to protect our savings from inflation. Real estate and equities, as mentioned, can provide returns higher than inflation. However, it's also important to consider the potential risks associated with these investments. Real estate can be affected by local market conditions, while the stock market can be volatile. Another strategy is to invest in assets that have a low correlation to inflation, such as commodities or precious metals. This can help to balance out the portfolio and reduce overall risk. Inflation-protected securities, such as Treasury inflation-protected securities, TIPS, can also be a good option as they provide a fixed return that is adjusted for inflation. These securities are issued by the government and can be a more stable option compared to other investments. It's also important to have some cash savings in low-risk accounts such as savings account, CD or money market fund. These savings can be used for short-term expenses and emergencies. In addition to diversifying across different asset classes, it's also important to consider a long-term investment strategy. This means not only selecting the right assets, but also considering the right timing to buy and sell them. For example, investing in real estate may require a significant upfront investment, so it may be more appropriate for long-term goals such as retirement. Another important aspect to consider is the management of the portfolio. Regularly reviewing and rebalancing the portfolio can help to ensure that the investments are aligned with the investor's goals and risk tolerance. It also helps to maintain the desired level of diversification. It's also important to stay informed about economic conditions and trends, as these can affect the performance of different assets. Monitoring inflation and interest rate changes can also help to anticipate potential impacts on the portfolio. Another important aspect to consider when protecting savings from inflation is to consider investing in assets that have a regular cash flow, such as rental properties, bonds or dividend-paying stocks. These types of investments can provide a steady stream of income, which can help to offset inflation and provide a cushion for living expenses. Other strategy to consider is to invest in assets that have a predictable cash flow, such as annuities or bonds. These investments provide a fixed income that is paid out at regular intervals, which can help to plan for retirement or other long-term financial goals. It's also important to consider the risk and return trade-off when making investment decisions. While investments with higher returns may have a higher potential for appreciation, they also come with a higher level of risk. On the other hand, investments with lower returns may have a lower risk, but also a lower potential for appreciation. It's important to find the right balance between risk and return that aligns with your investment goals and risk tolerance. Another approach to protecting savings from inflation is to invest in assets that provide a hedge against inflation. For example, investing in commodities such as gold, silver or oil can provide a hedge against inflation as the prices of these commodities tend to increase when inflation rises. Another alternative is to invest in foreign currency or international stocks, as these investments may be less affected by domestic inflation. However, it is important to note that these investments come with their own set of risks, and it is important to do proper research and consult with a financial advisor before making any decisions. It's also important to consider the impact of inflation on your future income. For example, if you are planning to retire in the future, it's important to consider the potential impact of inflation on your retirement income and plan accordingly. This may involve saving more, investing in higher-yielding assets, or considering other strategies such as downsizing your home or working part-time during retirement. In conclusion, inflation has a significant impact on our savings. It erodes the purchasing power of our money and can make our savings less valuable over time. However, by understanding how inflation affects our savings and taking steps to protect our savings from inflation, we can ensure that our savings remain valuable in the long run. This is for educational purposes only and should not be taken as financial advice. The information provided is not intended to be a substitute for professional financial advice. Please consult a financial professional before making any financial decisions. Please, comment, like and subscribe.